Over the last few months on this channel, we've spent a lot of time talking about regulation, institutional adoption, AI agents, tokenization, stablecoins, and where the crypto industry may be heading over the next few years. But one question I get all the time is, okay Robbeh, that's great, but what projects are you actually watching? So today, I want to actually answer that question, not by giving you a bunch of coins to buy, and definitely not by pretending I know what the next 100x coin is, especially in this market, but by sharing some of the projects and ecosystems I've been paying attention to based on the major narratives we've been exploring together over the last few months. And before we begin, this is not financial advice. I currently have very little or no exposure at all to the projects we'll be discussing. I haven't been paid by these teams. This is not sponsored content. And frankly, I may never invest in any of them. These are simply projects that have caught my attention because they sit at the intersection of some very powerful trends. Equally, I may decide that I want exposure to all of them, but always do your own research before making any investment decisions. Throughout this video, I don't want to just look at the narrative. I want to look at the investment case, because a great project does not necessarily always mean a great investment. And that is where I think a lot of people get caught out. The first project I'm watching is Virtuals. But before we talk about the project itself, I think it's important to understand the narrative. Because I don't invest in tickers, I typically invest in themes. And one of the themes I'm watching closely right now is AI agents. Now, whether you believe the AI agent hype or not, if autonomous agents become genuinely useful, they're going to need infrastructure. They're going to need wallets. They'll need payments. They'll need identity. They'll need ways to interact with applications autonomously. And that's where projects like Virtuals become interesting. So what exactly is Virtuals? At its core, Virtuals is a marketplace for AI agents, a platform where developers can create and launch agents. Users can discover them, interact with them, and potentially pay for their services, and a place where those agents can have their own on-chain identities, wallets, and economic activity. So rather than being a single AI product, Virtuals is trying to become an entire ecosystem around AI agents. And that's the part that caught my attention, because it's not just another AI chatbot, it's attempting to build the rails for an entirely new category of digital participant. And if that future emerges, Virtuals could be very well positioned. But now let's look at the actual investment case, because this is where I think people need to be careful. A great narrative does not necessarily constitute a great investment. So when I look at Virtual, I'm looking at valuation, liquidity, future dilution, and most importantly, whether the token actually captures value if the ecosystem grows. How much supply is already circulating? How much remains to be unlocked? What does the current valuation imply? How much upside is already priced in? These are the questions I'm trying to answer. And the Tokenomics protocol here gives us an overview of the tokenomics that unlocks the liquidity and the vesting schedule. We can see that currently Virtuals has a 372 million market cap, with a fully diluted market cap of 568 million, meaning that approximately 65% of the tokens have already been released, 60% appearing to be the public distribution, and 5% being the liquidity. What is left to be unlocked, and to be determined here, is 35% of the remaining tokens for ecosystem treasury. And ecosystem treasury can mean a number of things. It can mean that it be used for marketing, the team, encouraging developers to adopt the protocol, rewards, and more. We can also see that the tokens followed a pretty typical out of the market pump to 650 million before slowly but surely finding its way back down to a much more moderate 372 million valuation. We can also see that as of this moment, there is no pending unlocks upcoming. There is a tag suggesting pending verification, which means that at some stage I would expect there to be more tokens in emission. So what does that tell me? At this moment in time, I think it's fairly safe to say that we shouldn't expect many more tokens coming into circulation. There's also a strong amount that has already been released and good liquidity across the protocol. This helps to prevent from any wild swings, overall indicating that I have no severe immediate concerns following a sharp decline from the initial release and the likelihood that a lot of VCs have taken some initial profits, that we are not too far from some sort of local bottom for the moment in time. So where do I land overall? I think AI agents are one of the more interesting narratives in crypto. I think virtuals is well positioned and well tied to that thesis. I would suggest further work on the valuation and review of the tokenomics. If you're not fully experienced on how tokenomics work, I recommend that you watch some YouTube videos and read some articles on how to do so. But for now, from my perspective at least, virtuals is very much firmly on my watch list. The second project I'm watching is Aerodrome. And among the projects we've discussed, what interests me here isn't just the narrative. It's the role that Aerodrome plays within its ecosystem. For those unfamiliar, Aerodrome is essentially the liquidity hub of Base. It's where a huge amount of trading activity happens. It's where liquidity gets coordinated. It's where protocols go to bootstrap markets. And it's increasingly becoming one of the core pieces of infrastructure that helps the entire ecosystem function. What I find interesting is that Aerodrome isn't trying to be the next flashy consumer app. It's building the plumbing. And historically, some of the most valuable businesses end up being the ones providing the critical infrastructure. When I look at Aerodrome today, I see a project that's managed to establish itself one of the key venues on Base. It has liquidity, it has users, it has integrations, and it is becoming deeply embedded into the ecosystem. Now, of course, part of the reason that matters is Base. Over the last few months, we've talked a lot about Base. We've talked about Coinbase. We've talked about Base MCP. And we've talked about Base's ambition to bring millions of users on chain. Because when I think about the next phase of crypto adoption, I keep coming back to distribution. Who actually has users? Who actually has trust? Who actually has a realistic path to onboard millions or billions of users to crypto products? And Coinbase and Base may still be one of the strongest answers in the entire industry. Equally, if we were to take a look at CoinGecko, the token performance, we can see that Aerodrome, like many projects, had a really good out of the gates performance. It appears as though VCs took some initial profits, and then it actually had a repeated second increase here. That generally suggests that the product is beginning to be used. Now, equally again, I would hazard a guess that a second or third unlocks occurred and VCs continued to take profit, and yet the token came back again. Once again suggesting that the token may actually have a strong use case within the ecosystem and that users are valuing it. Then, if we just take a look at the timing, September 25 in and around October 25, it's not surprising that, like almost every other token on the crypto market, it has seen a sharp decline before generally setting around a relatively modest 50 cents from a high of just over $2. These ranges, in crypto terms, are not crazy and are somewhat admirable of a local floor or bottom of 50 cents with a high just over $2. Too high of an increase and too high of a top can make finding its way back there unrealistic, and too low of a bottom can indicate a dead or unadopted token. Here, we have a relatively moderate distance between a 50 cent floor and a $2 top. So what does this say to me? That the token is actually being used. Again, if we're to look at the Tokenomist here, we can actually see a greater breakdown of the emission rates and the different buckets for what the token's being used. The chart here shows that in actual fact, there isn't a huge amount more to be released. Over 62% is in circulation. There's also some useful insights here suggesting that there's some buyback activity occurring. What does this say to us? That despite a relatively poor market, that the project itself seems to be fairly well funded. There are also some unlocks happening, so you should be aware of that. But generally speaking, from seeing a lot of charts in my time, I would suggest that the overall chart health is relatively good, if not very good. So the reason Aerodrome is on my watch list is because if Base continues to grow, Aerodrome feels like it's one of the projects most directly positioned to benefit. I keep coming back to it. Distribution. Who has the users? Who has the trust? And Coinbase seems to be one of the strongest answers in the industry. And Aerodrome has become one of the most important pieces of infrastructure on Base. It's where liquidity sits. It's where incentives are coordinated, and increasingly it's becoming one of the primary venues through which users interact within the ecosystem. But I think that the important question isn't whether Base grows. It's whether Aerodrome captures enough value if Base grows. How sustainable are emissions? How much future dilution remains? How much value accrues to token holders? And can the protocol growth translate into token growth? If Base becomes one of the dominant ecosystems in crypto, Aerodrome feels extremely well positioned. So once again, it's on my watch list. The third project I'm watching is Jupiter, and this is where I want to give some credit to what is happening on Solana. Because whether you're a Solana supporter or not, I think it's difficult to deny that some of the most interesting consumer crypto products are emerging from that ecosystem. People are actually using them. People are actually interacting with them. And that's something worth paying attention to. What I like about Jupiter is that it increasingly feels less like a product and more like infrastructure. It sits at the center of a huge amount of Solana activity. Swaps, perpetual, routing, DCA functionality, and an increasing amount of user activity. So when I think about Solana, I find myself often asking, where are users spending their time? And Jupiter continues to be one of the strongest answers to that question. But once again, usage alone isn't enough. The question is whether token holders benefit from that usage. Can product growth translate into token growth? Does the revenue matter? How much supply enters circulation? And what level of growth is already priced in? That's the analysis I think investors need to do. So once again, if we look at CoinMarketCap, we can see that it has a market cap of 728 million. It's 75% down from its all-time high, which is not as aggressive as many crypto projects. Approximately 50% of tokens are already in circulation, but there are 827,000 token holders, which is a really strong amount of token holders. There is almost 1% liquidity into the market cap, which is fairly average also, which indicates that once again, this token may have found a fairly recent local bottom. And again, the difference between 20 cents to $1.50 is not that crazy when considering most crypto projects. Overall, from what I've seen, Jupiter, one of the strongest consumer-facing products in crypto, it does have real usage and it has real mindshare. It has become a core piece of the Solana infrastructure. So this is the third project that remains firmly on my watch list. And again, if you want to do a deeper dive on Jupiter's tokenomics, I'd encourage you to take a look at the Tokenomics AI and look at Jupiter. The final crypto project I am watching is Ondo, and this one connects directly to many of the themes we've been discussing recently. We've talked about regulation, we've talked about stablecoins, we've talked about tokenization, and we've talked about institutions entering crypto. And if that future plays out, projects connecting traditional finance and blockchain infrastructure become increasingly important. Ondo sits directly within that narrative. It's focused on bringing real-world financial products on-chain and helping bridge traditional capital markets with blockchain infrastructure, which is why it caught my attention. As we can see here from Ondo's app, it is connecting traditional capital markets with tokenization. And honestly, this is probably the sector I'm most interested in at the moment. Projects like Ondo could be positioned directly within that trend. But again, the same questions apply. How much value accrues to token holders? How much future dilution remains? What valuation is the market already assigned to that future? And how much room is left to grow? CoinGecko shows us here that the market cap is currently just under 1.5 billion. It had an all-time high of just over $2, and it's currently sat at around 30 cents. Again, this chart pattern is not too crazy for typical crypto markets. A high of $2 and a relative local low of 30 cents is within a fairly healthy range for a typical crypto market. We can see that, of course, like most projects since around September, October this year, they've experienced a fairly sharp decline in line with more broad bear market conditions, which shouldn't act too much of a surprise. Meanwhile, we can take a look at DeFi Llama, which tells us more information about the token, including volumes, fees, and revenues that have occurred, that can give us a broader understanding of Ondo as an investment thesis. And we can look once again at the Tokenomist to see some further details about token emissions. The key insights section here highlights to us that there are no token locks expected in the next 30 days, and that Ondo has actually raised $34 million across 3 rounds, including some of the biggest investors in the space. So what conclusion can we draw from reviewing the tokenomics there? Ondo is very well financed. Their need to liquidate more tokens is unlikely, certainly within the short term, in order to fund further development and protocol growth. This is a positive sign for the token, but the tokenomics does indicate to us that there are more unlocks due, so this is worth bearing in mind when considering Ondo as an investment thesis. Of all the projects we've discussed today, Ondo may have the actual strongest direct connection to the institution and tokenization themes we've been exploring recently. It's definitely one I'll continue researching, and it has definitely earned its place firmly on my watch list. Hopefully what you've noticed through this video is that I'm not trying to pick winners and losers. I'm trying to identify narratives, AI agents, Base, Solana, consumer crypto, tokenization. Because in my experience, the biggest returns often come from identifying where the industry is heading before the market fully appreciates it. As an example, identifying the wider crypto ecosystem's need for layer 2s before layer 2s became a thing. And that is what I'm trying to do here. My real takeaway is this: the projects themselves are super interesting, but perhaps the narratives behind them are even more important. Narratives create opportunities, and projects are simply vehicles through which these opportunities may be expressed. These aren't recommendations, they're simply some of the projects that are sitting on my watch list. I'm curious, what projects are on your watch list? And perhaps more importantly, what narratives do you think will define the next phase of crypto? Drop them in the comments below, and if you enjoy founder level breakdowns on crypto, capital markets, AI and emerging technology, please subscribe to my channel and like this video, and I'll catch you in the next one.